Ravi, can you hear me?
Yeah, I can hear you.
Welcome, Shashank. We'll be discussing the current market situation, basically the volatile market, and how should we proceed going forward. So, Shashank will share his experience with us. So, kindly wait for a couple of minutes till the time the issue is resolved. रवि यार, in the meantime आप ही अपना व्यू बता दो, हम शशांक को लेके आएंगे, उनको भी सुनेंगे.
Yeah, sure, yes. For the first thing, actually, I was reading half hour back. Our finance minister has reduced the excise duty on petrol and diesel. Very welcome news in terms of escalating prices everywhere. Yeah. The consumption definitely will take a boost on this news. I'm taking this because this is very, very hot, just came half hour back. Uh, One thing from this is there might be a fallout on our interest rate because about 1 lakh crore kind of collection which comes to central government in terms of excise will move out, and 1 lakh crore is very big number on our total base of balance budget balance sheet of something around 27-28 lakh crore. So 1 lakh crore will play an impact on our GSEC. GSEC is already rising. It has been about 7.4%. Other fallout from this sector could be like our post budget. We were very bullish on infra because government was saying that it will increase the infra spending by 40%. So hence we think that the infra spending they are not going to do as they promise because the inflow will be lower because of lower excise. Other thing which can be very boosted from this is first is auto. Auto has been on doldrum. I have been conveying in lots of spaces earlier as well. Pretty bullish on auto. We are our sales number are some what we were used to do 2015-16 types. So the biggest beneficiary from this would be auto, as we were seeing that the sales were lower because the auto price basically on ICE engine, internal combustion engine, the price of petrol and diesel were having a havoc on the auto sales. So auto sales is expected to go dramatically up because of this. The other thing is discretionary consumption overall should have a better leg up because of saving which will come because of lower fuel prices. The other thing is wherever you see logistic as a major component of cost, that will also be beneficial. Something to highlight which comes directly in the mind is something like cement. Cement logistic cost is somewhere equivalent to
Ravi,
whatever
Ravi,
EBITDA. Yeah, yeah.
sorry to cut you short. I
Am I
think he
audible
has
now?
joined. Let me. Yeah, yeah, we can hear you, Shashank. Welcome.
Hey, Shashank, welcome here. Yeah, we can continue normally.
Are we audible, Shashank?
Yeah, I think I also can hear you. Yeah, you can finish
Yeah.
if you want. Then I can probably start.
No,
Yeah,
we are
yeah,
good
yeah.
in
I
the
can hear
meantime.
you.
Okay, okay. Yeah, that's cool. So,
Yeah, I
guys,
was just
we have with us Shashank Mahajan. He runs a channel by the name of Value Educator, and on Twitter also his handle is Value Educator. So, guys, so he runs a YouTube channel, and there are over 70,000 subscribers to his channel. He is very popular among people. He have over 265 videos over his YouTube channel. Apart from that, he runs a advisory services where he guide and he believes in investing in stock market to create long term wealth. So welcome, Shashank. We would request you to give your introduction on your part, and we can start with the session. Thank you. Over to you. So Ravi, yaar, continue karo please till the time we get him back.
sure, yeah. What I was saying about the sectors which will get benefited. I guess I covered auto. Apart from that, I feel discretionary consumption should do well. And then on top of my mind, the sector which comes is something where logistic is an important part of expense. Something like coal transportation, cement transportation. In cement, we see logistic is about 700, 600, 700 rupees per ton. That is about equivalent to half of the EBITDA which the sector generates. So
Okay.
that kind of sector will
Ravi,
definitely do. Generally speaking, we are seeing deep corrections. Market has been volatile for past few months. Uh, Normally, as I mentioned in the previous session as well, I don't think bear market has a very long shelf life, just like a bull market has. We entered the fourth and the fifth month now, and if someone who were waiting on the sideline in 2021 saying the valuation are stretched, I think it's a great time to nibble if he already has not started. Keep on doing that for next 5 6 months. You will have a good time opportunity to invest in the market. Normally, we see when interest rate cycle starts to change, like it has been a relatively low cycle, India, abroad, everywhere, and it has elevated to a decent level in past 6 7 months. When that cycle turns to stable at an elevated level, at that point of time you will see that equity market will start to perform very well, because in last 20 30 years there has hardly been years when there was drawdown on equity and debt both at the same time. I guess if I remember right, in last 40 years there were only 3 years when equity investors and debt investors both were in red. So till now, in 2022, equity and debt investors worldwide are in red. There are deep correction in debt because of increasing interest rate. The instrument prices are falling dramatically, and similarly there is drawdown on the equity side. So this would be one of the, like, among the last 40 years, one of those 3 years when you will have a debt and equity both underperforming. And normally what happens after that 1 year, equity normally bounce very fast. So if you have cash, if you are a salary earner, you accumulate cash every month. I think this should be a good time to accumulate, and this will bear fruit in terms of long term investing. You hold that good quality stock for next 5 7 years, 10 years. This is a good time for entry, I guess.
So, in the meantime,
Yeah.
we can request Avinash to share his views on the current turmoil going on in the market. Avinash?
Yeah, I think good evening, everybody. I think before Shashank joins, I think I can give a little bit of comment to all the members. Like now this petrol and diesel price cuts which have been announced. See, frankly, I am of the opinion that about a couple of weeks back there were reports that these companies were incurring heavy losses both on petrol and diesel. So इतना आसान लगता नहीं है कि पूरा 10 रुपया या whatever डीजल का जो भी एक्साइज ड्यूटी कट हुआ है the entire benefit will be passed on to the customers, because somewhere these companies are incurring losses. If they pass through the entire benefit, then again their profit and loss, their balance sheets, and their cash flows again get negative, and which is already happening. The only caveat is that Gujarat is going to see elections. December 22 May current government tenure ends. So possibly this is just before the elections. Government has done this kind of announcement. There could be a political kind of connotation to this decision, and we'll have to see how much of this the excise duty cut is actually passed by companies to the customers on road, because the belief is that this will come entirely to the customer, which is very difficult to digest as of now, because already 10 rupees ka loss to petrol pe these people were incurring. So I think it's going to be a tough call. It's not so easy. I think government assumes that सब कुछ उनके हिसाब से होगा, inflation कम होगा. So my guess is unless crude prices really cool off, and we see crude prices of 75 $80 a barrel, रशिया यूक्रेन का वॉर खत्म नहीं होता, तब तक इन्फ्लेशन का जो ओवरऑल ग्लोबल कंसर्न है, डोमेस्टिक कंसर्न है, वो इतना जल्दी जाने वाला नहीं है. And I reciprocate what Ravi has said, that this is a market where I think now everybody has got to do his homework, look at some sectors which are going to benefit significantly, some of the companies which are debt free, which are generating a lot of free cash flow. I think this is a time when an investor like all of us can actually sit down and patiently cherry pick some good companies, because valuations have come off very significantly, almost 60 70% peak levels se prices correct ho chuke hain. So it's a good time to start looking at some good sectors. I mean, I would be very positive on the export companies, because a strong dollar, weak rupee is going to be very beneficial for the exporters. And there are many sectors which I think now all analysts will really do a little bit of number crunching and try to see which sector benefits from this currency
Right,
kind of
right.
tailwind. So I think that's my view. I think Shashank
Thanks.
has come in, so I think
Yeah,
we can tell him to continue.
yeah. Thanks, Avinash. And Shashank, can you hear us now?
Yeah, I can hear you. Can you hear me?
Yeah, we can hear
Yeah,
you loud and clear.
yeah.
So,
Finally, it is
oh,
all like, yeah.
it
Sorry for
happened
that.
last time as well. Actually, Twitter Spaces has improved on glitches, but again, at times it happens. So, welcome again. Over to you, Shashank.
Yeah. Thank you. This time, I hopefully like it should be smooth. Yeah, I've been in market from like about last about 7 8 years, And I have a YouTube channel by name Value Educator, and here on Twitter also I am active. So I'm more into the researching about the sectors like specialty chemicals and agrochemicals and more related to chemicals and pharmaceuticals. And then apart from that, I'm covering some stocks into building materials and real estate space, and have tracked the banking industry also, but not much actively doing it now due to certain reasons. But definitely looking for my investment philosophy is basically I'm a like small cap investor, not much interested into large caps, because as they are well discovered stocks, and I don't think like I will add any value into the already discovered stocks by doing any additional research, because most of the things are already available. So I try to understand about the company and try to like pick those stocks which are not discussed much. Try to pick them early, and then I wait for the value to emerge. So able to successfully pick out some stocks quite early, like Indian Energy Exchange or Tata Elxsi or CDSL, to name few, and probably Deepak Nitrite and all. So 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 my over the period of time had done many mistakes, been learning, and the investment approach actually improved over the period of time, starting from very deep value to now probably a mix of value and growth, and then how to look at the management, and like how to actually understand which is actually a really good company versus Medicare one, and then the not so good. So I think we'll discuss about it in depth as and when we'll progress this session. But definitely trying to learn from every mistake, and trying to learn from the different market cycles, starting from 2015 correction in Nifty, and then 2018 to 20 in small mid caps, then pandemic, and now again there has been a good volatility due to China lockdown and war, and crude is again gone up above $100. So and like again, inflation is increasing. RBI and Fed has increased the interest rate. So good learning in different cycles, and yeah, this is like a short introduction about me.
So Shashank, if I remember correctly, you are from engineering background. So how you developed Pasha for investing, and how was your journey in the early years of maybe prior to 2015 or when you just started?
Right. So by education, I'm like a electronics and telecommunication engineer. But when I was in college only, like I had some passion about the market, like how the businesses work, and I actually from the day one I wanted to do my own business. So that passion and that zeal was there. So actually, I have not worked anywhere like from the day one when I probably passed out, or before actually not even passed out. Before passing out, I actually started my own venture from my own like little bit capital, not related to stock market. So from there actually I got some funds in next 2 3 years, and then that I had invested in market, and like from there the next journey has started. And I mean, like it was a bit difficult initially to understand the financials, because my background was not like that. But I mean, I was mostly into reading different stuff, trying to discuss with different people. My dad used to like invest a bit from his demand. So, and then his friends and all were like a bit into market. So got a very like you can say a very humble background, and like some inputs from him. And then from then I had a continued tried. Then like I started visiting and going for the AGMs, which were in Mumbai. I'm basically from Mumbai. So AGM को जाने में कुछ नहीं लगता. You just have to hold one chair minimum. So you can just go there and sit with the people, and then keep your ears open. That's what I have done initially, and then there were various events used to be into NSA building. So I used to that building itself has its own aura. So I used to go and look at that building, and then after that, like I started going for various events for some mutual funds, and like trying to collect the information and data from wherever I can. And because that time this YouTube and Twitter was not that much famous. So my I think my I got introduced nicely by watching uh, or listening or reading about Mr. Ramdev Agarwal wealth creation studies. So that was a good introduction to the market, actual introduction related to research. Because पहले तो सिर्फ like I used to read about PE and like balance sheet and cash flow statement और ये, but उससे ज्यादा कुछ understanding नहीं था, और it was a only uh, a financial related understanding. Because research is all about creating your numbers with narratives. Only numbers doesn't matter, only narratives doesn't matter. uh, and the key aspect of investing is understanding a business model and understanding a competition, and so on. So that actually I learned from the Ramdev Agarwal. And in one of his videos he had mentioned about Michael Porter Five Forces. So that book I read, and then I think like it is actually a very tough book to read. But once you understand like the basics of Porter Five Forces, how different forces works, like bargaining power of suppliers and customers and entry barriers. So then I understood like everyone is talking the same thing. Even Warren Buffett also, if you check, he is like he's saying the same thing. Look for the entry barriers, understand your competitors, and then I think process becomes very easy. And then I learned a very simple and effective thing by Mr. Buffett, which he had mentioned in one of his talks. Is like take a take a like a punch card, and provided that you have only 20 punches on them, and just select those number of stocks in your lifetime. I think probably you will do well. So always practice the concentrated investing, and mostly into undiscovered kind of stock. There has been some mistakes, because it's a part of a journey, but overall able to do fairly well till now. Let's hope I'm able to continue. So this is about like from engineering background, like I moved into the market completely, and actually it helped also because during engineering as a career, like you always I mean, I know how I have appeared for my final exams and different exam, because that mindset preparation that engineering has given me. And then now I've got that curiosity about understanding a business, different business models, uh, like um, like uh, like completely new industry. How you can understand? Like I have like a team of about 10-15 people with me here. So I always ask my new employee that like research is an indefinite thing. When it's like when we are young, when we are like in our early stage of life, like child. So we used to connect the dots, and that animal used to pop out of a picture. Yesterday only I tweeted about it. So this is the nothing but a research. We don't know where we are actually going. And if we have to learn about say 10 different things to completely understand a business or a stock, so we don't get a data for that 10 things sequentially. We'll get a first block, we'll get a fifth block, and we'll get a seventh block. But unless you don't get different in between blocks, second, third, and probably nine, your research is not complete. And it takes probably years or months to get actually that uh, required information. And till you don't have the access to that information, it's very difficult to take a decision. So probably it might be on a management part, or it might be on a competition part, or it might be on a product part or a process part. So till now also I'm stuck with certain businesses which I probably started in last 6 months, but I am not able to take any call of say buying, or I don't short sell, but definitely for buying. So I have to wait till I get that information. And then over the period of time, we develop our circle on ground, we do scuttlebutt. So starts falling into place. So just come back to the point that engineering actually helped to develop this curiosity. uh, and I think that is the most important thing while doing the research, because in research I think you don't have to ask the question to other person, you have to ask the question to yourself. All right, so once you start asking the questions to yourself, that understanding develops. And more questions you ask to yourself, I think over the period of time you get a good understanding. And then you actually start comparing various business model, and then you get a clarity that which one is better and which one you were thinking is a better, but actually it's a very bad business model.
Right, Shashank. So, guys, I have a little information for you all. Recently, Shashank has started an initiative in which the people who are, into analyzing business, they can reach out to him, and probably, if he finds substance in your analysis, so probably he can have a video with you people. So, am I right on this, Shashank?
Yeah, right. So till now I have uploaded many videos on a YouTube, and actually it also requires a lot of efforts. If you all have any time, you can just check and check the videos on YouTube, because starting from the analysis to creating a presentation, then it is a for at least a one good presentation and good analysis, it at least takes me about a month, and then we have to create that pipeline. So it's a quite a big task. But try to do whatever I can best till now. So then I thought, let's create this platform and let others also come, because I myself cannot do the research of 5,000 stocks. I have my own circle of competence, and time is also limited, though I am like probably working 7 days a week. But definitely others have much more better understanding of that particular stock which I am not following. So I have done like couple of sessions till now. If anyone have a good understanding, you can send me your presentation on my mail, and then we can have a one session, and then probably like you can explain about that stock. I'm open to that. So finally goal is to make audience aware about the business in a simple language, and as in depth as possible. So that is a whole objective of this, nothing else.
Yeah, great. Ravi, you want to ask him?
Yes, Shashank. One thing I fully agree with him that research is all about inquisitiveness. You keep on digging and digging, and then you understand some company, you understand on some sector how that animal is performing. Shashank, I have one question. Say you are dealing more in unidentified, below the radar kind of stocks. What are the information you seek apart from you said that you visit AGM, you do scuttlebutt? How you make that understanding of the company, which is not so much prevalent, where information is actually not easily flowing towards you. So how you go about on those companies? Yeah, and if you can take some example also, some of your previous research, it will be helpful. Yeah.
Yeah, right. So I think here comes the circle of competence. Probably if, if anyone is new to the market, one should definitely have the circle of competence till you complete that particular sector. You have to be very focused, because if you start following the five different sectors just when you'll enter and when you are very new to the market, then it will be very difficult for you to start picking the companies, because to understand a one sector thoroughly, it takes a lot of time. And if you are particularly into pharmaceutical and chemical industry, every stock is itself a sector. So that thing is a very different thing compared to any other sector like metals and OEMs, and then बाकी जो है sugar ये वो, because उसमें क्या है, once you understand one company you will probably understand all other companies. So but that is not the case with chemicals and pharmaceuticals, because products and everything is different. So coming back to the question of like how to identify and how to dig deeper when the data is not available. So answer to that is the circle of competence. When you start with the one company, you start about, I'm just giving my answer with respect to chemicals. but it is applicable to all other sectors also. So you start with the first company, try to understand its products or services if it's a service based company, and then check out over the period of time what kind of products they have developed, what kind of R&D they have, what kind of the process innovation they have, product innovation they have, and how they are trying to beat and perform better than their competitors. So these are the general points which are applicable for any sector, not specifically for the chemical sector. um, so once you understand one company about their products and services, then go to the second company into same sector, and then over the period of time, when you'll complete 8 or 10 companies, you'll have a good understanding about the sector. Just by reading one company, I don't think so we get any understanding about the sector. So if I'm invested into X company, or if I wanted to invest into X company, I need to know at least 4 to 5 competitors of that company. Then only I can comment about is it a good company or is it a bad company. Because on a standalone level basis, when I'm not comparing that company with anyone else, I feel, I mean, I will probably get very biased, and I I I will look through that lens where everything looks good. So that is the issue I also initially suffered from. That अरे चलो ये तो बहुत अच्छा दिख रहा है, let's buy it. But then you come to know that this is not the actual case. There are much superior companies which are available. So information in small caps, definitely it's a challenge, and I think that's what interests me. So like let's take some examples. Like say a company which is a Poshak. So so आप उसका एनुअल रिपोर्ट देखोगे तो कुछ नहीं मिलेगा उसका. There is not even a investor presentations also, not a conference calls also. तो उसमें थोड़ा केमिस्ट्री का बैकग्राउंड इज इम्पोर्टेंट, थोड़ा रेगुलेशन का बैकग्राउंड इज इम्पोर्टेंट. And for a disclosure, I have invested into this company from long time. And तो उसमें क्या है story, you need to understand the story also, and you need to understand the numbers also. Because if numbers are not matching with the story, then it can be a difficult thing. Immediately, like to like basis, it might not match every quarter, but on a long term horizon, it should match. Because either market is like aware about the story, and then फिर वो already valuations दे देते हैं, and numbers actually comes later. So you need to check margin of safety and valuation and all that parameter. So in this case, like thoda chemistry ka background lagega, because if you know what is a 4-gene and like how dangerous it is, and then Bhopal gas tragedy and all, if you know about it, then you'll come to know the strength of the company, the product of the company. And then as I told you, like my key focus always is to understand the competition, because here the competition itself is limited because of the regulations from the government, and no one can start the plant very easily. So that itself creates a good entry barrier, and once we understand the entry barrier is there, and then I start looking for the growth triggers. Because only entry barrier is not sufficient, I feel, to create a wealth. Because market always gives a valuation based on firstly growth and then all other things. Growth nahi rahega to like market don't give the valuations. That is a good hard learning which I have. So if you pick a value stocks without the trigger, it remains a value trap. That is the key learning I have got in my journey. So probably best way to create a wealth out of a market is look for a value stock with triggers, and when those trigger actually materialize, then फिर वो operating leverage and then P expansion and all of that starts. So the question was related how to find out the information. It is bit difficult into small caps. You need to have some connect on ground. If you have any person or any group who is actually having some plans, and if he have any good understanding about that industry, then actually it helps. Over the period of time, you'll able to create your own circle, which can give you the real time basis inputs. and then you'll probably start doing better and better. But to start with the first company, then understand its product, start then look for the second, third, and at least cover 70 to 80% of those company. And it is a hard work, it is not very simple, to be very honest. It will take time, and it has taken a lot of time for me to understand the sector. But I think that is the way to go. Otherwise, then the first company itself will start feeling very good company. So that is the process which I generally follow. And then फिर बाद में like financial analysis and everything comes. The valuation is the last part which I keep, because I generally don't start with the valuation, because when I start with the valuation I will miss the business. So I'm interested in buying business. Valuations definitely does matter, but the bad business always trades at a probably very cheap valuation, and it remains cheap. So I try to focus on a business which is good, and then try to buy at a better valuation.
Great.
Understood. Understood. I was reading somewhere you mentioned that you are not investing in IT packs and FMCG. FMCG, I understand from your now comments that this might be because of lack of growth as well and valuation which they trade. Anything you want to comment on how they see their growth and valuation, how they have been traded historically and what where they trade now for both IT or FMCG, anywhere you want to comment on?
Yeah, so I'll come to both sectors. So FMCG, again, it doesn't fit into my criteria, because I am more interested into small cap companies. Many small cap companies are not into directly FMCG. They might be proxy companies. Few are there definitely, but in general, I have observed that this FMCG pack, I'm talking more of a established company like Nestle, HOL, and Britannia, these kind of companies. So they generally trades at a premium, and then there is a valid reason why they trade at a premium, which is longevity. The market also looks through this lens. So market, as I mentioned, like gives a valuation to each business based on various parameters. One of it is a growth. While in FMCG case, I feel it is a more of a longevity business, because Nestle ka Maggie will not going to stop eating if there is a recession, if there is a pandemic, or if there is a probably war. But the problem of these companies is like they are not growing at that high growth rate compared to their valuations, compared to their whatever market cap valuations, PE ratio and all. So in general, I look to those companies where PEG is generally 1 to 1.5. Below 1 is very difficult to get into this market. I mean, the market which we had probably from last 1 year, abhi to thoda valuations are better. But if I get anything related, near to 1, I think, and if that growth can sustain, then like probably I'm okay with, if Nestle going to grow at 15%, and if it's trading at beyond 60-70 PE, that is the PEG of 4. So that is a very very high valuations for me. So I generally look for where I get like a PEG of 1, and 1 to like probably 2 also, but not very high, beyond 2. 1 to 1.5 is a good, we can say, a ratio. And FMCG companies, as I mentioned, they are mostly large cap companies, so I generally don't look for any large cap stock. Coming to the IT, definitely it's a very very interesting sector, and it will be more and more interesting as we progress ahead in a time. Probably after 5-10 years, most of the things will start uh, having more and more presence of IT. So growth wise, I'm very bullish. There are 2-3 challenges in the sector. First thing is the valuations. So after pandemic, what valuation this stock started getting was completely, I think, completely crazy valuations. I've been an early investor into Tata Elxsi, as I mentioned, but I'm no longer holding that stock, because only reason is like business is fantastic, management is fantastic, valuations are like I am not able to relate those valuations. Probably stock may not come down, it will keep rising, but I have to see like where the pockets where I get a better valuations with reasonable growth of PG of one. So I have been waiting. I mean, I didn't had any stock into IT from long period of time, uh, and like some of the platforms I'm holding, but like purely IT stock I don't have. And then I'm waiting for this correction, and then finally the correction started. And then I mean, correction also, one important point is like you have to be ready with your analysis, because if you start your analysis and research after a correction, then it is very difficult uh, for you to pick the stocks. Be ready with your uh, analysis and research, and then wait for the valuations to come to your point. And I generally do that. Till now, I mean, I'm ready with my names of the stocks which I wanted to probably go with the IT sector. But I'm just waiting for the better valuations. So if I'll get those valuations, I will go ahead and buy it. But just right now waiting for the right valuation, because IT was completely, I mean, trading at I mean, very high valuations. I feel right now there has been a like a good correction. I will wait for that.
Yeah, I agree on IT. They used to trade at the large cap used to trade at 16 to 21, 22 trailing multiple, and now everything is 25, 30. Next 1 year, we may see contraction of margin because of opening and traveling and whatever we see on the attrition side. Employee expense, which used to be 50, 52%, might be 55, 60% of the revenue. So IT, we might get a better entry point in next 6 months, 12 months. I saw you posted something on Praj. You would like to talk what you find interesting in that sector, and what actually I wanted to know on Praj is how you see once we achieve a certain level of ethanol blending in next 2 years, what can be revenue vision you can have for Praj once the ethanol blending and the plant installation is there? What is the sustainable revenue which can happen post that for Praj?
Uh, right. So good question. Very good question. So I've been reading this company and invested also, and probably biased also. Uh, so if you check, I also keep one framework in my mind, which is optionality. Right. So if you are looking through this framework, then and if you have more and more optionalities on upper side, definitely on not on the lower side, then it actually helps you. So provide, and it is actually, I feel, what Monish Babrai says, it's is heads I win and tails I don't lose much, when you have a optionality with that particular business. So you're asking me like, when what will happen on a terminal side when this capexes will start going down, and when the plants will be already ready and all.
Yeah,
So
something like that.
right. So if you check, Praj has started initially with 1G sugar, 1G ethanol plant. Praj is basically a technology provider and executor for the ethanol plants. They help sugar industries to like set up their plants. So initially they started with 1G plant, and then now they are also implementing 2G plants, which are probably a very complicated plant to implement. Then they are also into something called as CBG, which is compressed biogas. So where like government has a plan to plan to probably cover up to 5,000 CBG plant in India. So it is just started. Then the Praj is also working on like aviation fuel and marine fuel, and then they are also into a product called as biobitumen. So there are multiple optionalities. Then I will talk some more things, like they are also there is a separate division of Praj, which is they are working into zero liquid discharge plants, which is very necessary. You know what has happened with the Heikel. So that is also upcoming thing. Then they are also into something called as sterilized and lyophilized vials and all. So as and when the injectable space and the vaccination space which will keep developing, not related to COVID, but injectable is like more and more company, if you check in the pharma side, are coming up with the injectables like Gland Pharma and Gufic and other companies. So that space is also interesting. So I think Praj is the company I feel which is with multiple optionalities. And actually, I'm planning a full-fledged one dedicated webinar, probably of 3-4 hours very soon on a Praj to talk about like how one should look at this company, not only through the ethanol lens, because it's actually a biologics based company, and one should able to understand what efforts they have put from last many years. And R&D is that kind of a thing, like you keep on doing your research, and finally you will get that outcome. But whenever you will get that outcome, there will be huge operating leverage. Right now, probably they are doing it successfully, and due to change in policies and all, they're started getting that benefit. But only challenge is right now due to the metal prices. That's why their margins, if you'll check, it's a bit of uh, a depressed margin. And just to add one last point, Praj opportunity size is not only related to India. Just to give you some numbers, India, I think, have a production capacity of about, I think, 350 crore liters on ethanol. Additional 1,000 more liters capacity is upcoming to reach 20% blending, and it may go beyond 20% also if auto manufacturers are ready to change and ready to implement flex engines and all. Second thing is like we have absolute zero blending in diesel. Diesel directly actually cannot be blended with ethanol. So Praj is coming up with their own product. So if you check, the numbers of the diesel side are 4x of the petrol. So that no one is talking till now. It might happen, it might not happen. That is a different question. Probably it will take some time, probably next 3-4 years. But if that happens, then that is the whole different opportunity. Praj is also into hydrogen side, and like so I think many optionalities are there. I don't know which will come when, but if you have a long term horizon, I feel it's a good company, and no advice as such, right?
Yeah, yeah, agree with you. The one reason I ask is I find Raj promoter also very what you call entrepreneurial spirit is very high. They keep on innovating and bringing up in the new segment. So what we might see as a current business revenue might multiply in future. Completely agree. We'll be waiting for your detailed versions of webinar for Raj in the future. One
Yeah.
thing I wanted to ask, you cover cyclicals, you don't cover, it seems.
Generally, I try to stay away from cyclicals, but I've been like studying the real estate sector. It is more or less cyclical, and have certain positions into that also. But I mean, like I think I mean, at least before this rate hike, the things were like moving on the right direction. Rate hike might delay the some of the things, but there are certain like stocks I feel which are like have very very good valuations. Market is not able to understand it right now due to sales, due to various reasons. But I think like at least some selected stocks can do well in long term. I mean, not very long term, but probably at least next 3 years or so. So generally, I try to avoid the cyclicals. But if I get very good valuations where uh, where that particular business is not tracked, and if there are triggers, then I look into it, and then if everything like looks okay, then I generally take a small position, and then over the period of time I build.
Yeah, the reason is what we are hearing now is since interest rate cycle is on up move. So in the last down move, we already priced in the cash flow generating machine to a very low discounting rate. But when interest rate moves up, your capex heavy, whatever required a heavy capex, the value of those assets actually goes up dramatically, because building up a new asset will have a very high cost of capital, and if that is not built, the old existing assets will have a high cash flow power, high revenue power, because competition is not coming up along with the GDP growth. So yeah, few cyclicals. I think in the last cycle we were over dependent on that free cash flow theme. Now the discounting rate is going up, so a small free cash flow will not help in terms of valuation. But cyclicals, few companies generate very good amount of FCF yield, neglected in last cycle. That should do well. Yeah, you have anything? Question?
Yeah, Ravindra. So in the meantime, I would request the audiences kindly check handle of Shashank and also go to YouTube channel of his. It's very, I mean, you will find it very informative, very deeply studied and explained videos you will find over his YouTube channel. And in the meantime, Avinash, you can chip in if you have any question from Value Educator. And after one question or two question, we'll be opening the space for the audiences. They can ask their questions. And one important thing, any names taken in the spaces are only meant for educational purposes. They should not be construed as any biasal from any of the audiences. Thank you. Avinash, any question from your side?
Yeah, I think a general question which I want to ask, for the benefit of all participants, is that how should one understand industry cycles? Because the market moves in various industry cycles. Sometimes cement does well, sometimes auto does well, sometimes IT does well. So can you share your process as how you can identify a proper industry cycle, because that is also a very important element in the investment process. So if you can give some color on this topic, which can help all the participants.
Right, right. Yeah, yeah. Very good question actually. If you check, like, all the sectors are more or less cyclical. Some of the sectors are highly cyclical, like real estate and very commoditized kind of the sectors. Uh, but while certain other sectors are less cyclical, like FMCG is less cyclical, IT is less cyclical, certain chemicals and pharmaceuticals are also less cyclical, but more or less they every segment or every sector has some element of cyclicality. So I personally generally try to avoid very deep cyclicals. Wherever I have that understanding, I go with it. But generally, metals and all, I try to avoid it. Very simple rule to invest in cyclical. As I mean, I'm a great fan of Kenneth Andrade. You one of whoever wanted to listen to cyclicals. I think there are two very great people. Like, one is Kenneth Andrade, and I think Jiten Parmar. So I have learned a lot from them. So what Kenneth sir says is, like, you should look for those companies which are actually gaining a market share during a down cycle, when every probably a smaller company is not having a very good balance sheet and lot of debt, and they are trying to go away out of a market. So, for example, very simply, I will try to explain into in a with, say, a metal company. Let's take a steel industry. So Tata Steel, we all know it's a giant into that industry, and Tata Steel will also make losses at one point of time when the cycle is bad, and they have made in historically, if you check from, if you take a last 20-year data, Tata Steel profitability is not consistently increasing year by year. There has been some years where they have posted good profitability. There have been some years they have posted like very less profitability or even loss. So what the Mr. Kenneth says is, like, you should look for the best player into industry into a worse cycle. Worse cycle means everyone is making a loss, and provided that the good player have the good balance sheet, so they won't go out of a market. So what generally happens is, when a small player with the over leveraged balance sheet goes out of a market, the biggest player will try to acquire that capacity at cheapest possible price, like acquiring some company by Tata Steel at cheapest possible price. And then whenever cycle will revive, these capacities they will get, whichever they have acquired at cheapest price, they actually helps them. So my philosophy, I'm not very good actually into cyclical investing. and different cyclical investing and different sectors needs the different knowledge. But generally the philosophy and understanding is that like you bet on a top guy or a best performing candidate into cyclicals, and try to buy those stocks when they're performing or these businesses when they're performing absolutely bad, provided that balance sheet is good and they should able to uh, like stay or they should able to remain during that bad phase. And whenever the cycle turns, everyone does well, provided that they are like able to surpass that bad patch. So this is the small understanding of me. Like I generally go with the biggest player here. That small case wala or small cap wala theory doesn't generally apply, because those small caps may not remain in the market if they are over leveraged. I'm again saying, if they are over leveraged, if they able to maintain their balance sheet during a bad cycle, then definitely during a good cycle they will able to perform well. So this is just an example related to the metal cycle.
Yeah, great. We can relate with this, Shashank. So, coming to chemicals and pharma space, Shashank, how you see the supply chain issues going on, and how much you think the macroeconomic factors affecting the market currently have been discounted by the market?
Yeah, so from last I think 2 to 3 quarters, the supply chain issues are were there. Maybe initially they were not as significant as they are currently, and then top of that, this Russia Ukraine thing has happened, which has actually disrupted everything. So I think like it's a challenge which may remain for short to medium term. And like that's why I also right now is focusing more on those companies which are not dependent on China, because China is like under lockdown probably. So the companies which have a dependency on China will have some pressures in their margins and their profitability. But the companies which are not dependent on China, I think they are doing well, and they will keep doing well. So this is how I will generally look for mostly the chemical companies, for example, say the Deepak Nitrite and then the Jubilant Ingredient and all. So they don't have any dependency on China. They have their own value chains, which are based out of India only, and then they have the integrated operations. So this is another thing which I look for, which is the integrated operations, complete backward integration, and like there should be a good diversification also in the product side, so that like if any product gets banned or like a lot of competition enters into it, that should not cause a problem to the company. So like but supply chain issues are real. Container shortages are real, and it will take some time, I feel, for the things to settle down. But I think, see, like every business has some challenges. No business goes in a straight way, which is up direction. So wherever there is a good risk to reward, because one thing also I've learned from the market is, I mean, whenever there is a bottom, definitely there is a bad news. And price bottom happens first before the whatever extremely bad news comes. So like for example, like take an example of COVID. So whenever we had like very minimal cases, stock market like tanked heavily. I still remember, I think when we have detected cases in Kerala, probably like 20 or 30 cases, I think Nifty has corrected that day by 300 points. And then eventually it has gone to the like 7,500 levels and all. But whenever there were like daily 50,000 and more than that, like 80,000, 90,000 cases, I mean, market was going up. So market discount everything. We should able to align ourselves and try to understand what is actually a good valuation, how much like prices are already discounted, and then I think we can position our portfolio according to this. So I think like there are certain stocks which are badly got corrected, and probably the news is already factored in. So from here on, if there is any recovery in their margins and in their profitability, I think market, at least price wise, I think they should able to do well in a short to medium term. So we have to see the price in terms of what are things which are already discounted, or if there is any negative surprise, then definitely there will be a the hit on the prices. But I think like it's a good time for picking, choosing and picking stocks, not whole sector. I don't follow the sector approach. It's always a stock approach for me. So I feel like selected stocks have came to the very good valuations, and probably I have bought it at maybe some bit higher prices. I will again like average it, and like keep at least, if I have fund I will average it. If I don't have fund, I will at least hold them. No plans to like sell at this prices.
Yeah, cool. Makes sense. So we have a few audiences with us, so we'll take them one by one. In the meantime, I request the audiences to kindly visit the handles of the panelists, and if you find value, kindly connect with them. And also, Shashank, you run an advisory, so if you want to tell the audiences about it, you are free to do that. And then we move on to Rajiv Malik for his question.
So recently I have started like a model portfolio kind of thing. So where the actual approach is to give the value for the investor. So that is a long term program which I and my team has taken. So it's not only like this is firstly not an advisory thing. It's completely up to you if you want to follow or not. You have to take your own call. While along with that, the important thing what I am providing and planning to provide is the education. So the challenges which I faced while learning different sectors, I have created a multiple videos under that section, and like every day working on that thing and trying to come up with the different videos where I will able to explain about that sector in a very simplistic way. So that is the one thing which I'm currently fully dedicated and focused on. So I think like in next like about 2-3 months and probably in a 6 months, you'll have a very good data which might be accessible. I have like multiple other things which I'm working on. So hopefully like you will see very good resources at one place where you can access the information, because this is a challenge which I have suffered when I was doing the analysis, because there are like 50 different websites which I have to visit and take like two lines from here, two lines from there, and then collectively have to understand whole thing. So where I am create right now, I'm creating a platform where I have already collected all the information, and I am putting it in a linear way, which I was trying to explain at the start of the session, that when we were very young or like a child, we used to connect those dots until that animal used to come out, and actually we used to recognize that animal. So already those dots are connected wherever I have some understanding, and then that platform I am building, probably like let's see what happens in 6 months, but definitely like we are working hard here and trying to create some value for the members and for the listeners, and for like that kind of model portfolio.
Yeah, we can very well relate. Value Educator has been adding value to my investing journey. I really appreciate your videos, very lengthy, but they are very informative. I cannot miss an iota of information in that. So, best wishes for your upcoming ventures. So, Rajiv Malik, you can come up with your question.
Thank you very much, Accidental Investor Ji. And my namaskar to Shashank Ji, Avinash Ji, Ravinder Ji. And Shashank Ji, it was really great to know how painstakingly the research process goes at your end to finally present the facts before the small investors. And I was really very impressed by going through your Telegram channel, in which I saw videos like how to invest 1 lakh rupees in stock market and how from FD you should switch to stock market. So these are really the subjects that touch the pulse of small retail investor and trader, who are trying to create wealth or play this stock market with a very limited amount of hard earned money. So, sir, why not take advantage that, if today one has to invest 1 lakh rupees, what would be your straight away guidance? And secondly, long term wealth creation needs a lot of patience, which sometimes people lack who have small money to invest. So I wonder, though it's not part of your profile, but some trading opportunities should also, some swing trades in the stocks or something like that should also come from you periodically. Thank you very much for giving me this time.
Thank you, Rajiv ji, for your detailed question. And like first question you had asked about like how to approach a market if anyone has a capital of around 1 lakh. So I will be very transparent here. That like firstly one has to decide if he's a professional investor or going to be a professional investor by doing all his research by his own, and then picking the stocks and creating portfolio out of it, or he will be a passive investor. So that call one has to take. Like everyone don't have to go through this long journey and painstaking process and pick and choose the stock and create a portfolio, and then some stocks uh, uh, like work and some stocks don't work. So it's an individual journey and choice. But I feel like if capital is that, and like about 1 lakh, and if individual don't have the required time, uh, because most of you might be doing like your own busy with your own profession, a job or a venture or a business, you may not have the required time, because I think research is a full-time job. I mean, right now also I'm like in my office, and probably like I'll remain here for next 4 or 5 hours just by reading the like conference calls. So this is like a full-time job. You have to be very dedicated. Then only outcome comes, and outcome also won't come for initial 2 to 3 years, because that is a learning phase one has to go through. So if you like this thing, as I personally like this thing very well, I don't care about what kind of outcome I will get, but I enjoy the process. So if you are like if you like that process, then go ahead and do your research, and then you'll get a definitely outcome will be there. I don't know when you will get it, but if you are dedicated, you will get the outcome. But if you don't have the required time, and you like just wanted to be a passive investor, then nothing wrong with it. I think it's a very good thing. First we have to understand the difference between the FD kind of a income and like a gold kind of income versus stock market. If you check the last 30 years journey of a stock market, like Sensex, it has given a very good returns to us. So definitely, first we have to take a call that we have to come to the market, and we have to periodically invest the capital. It is not like if you have only access to 1 lakh capital, it's not like kal jaake 1 lakh invest kar diya, right? Because markets are volatile. If you are not seeing the cycles, then it might be very difficult for you to remain invested in the cycle. So if you have 1 lakh, like divide it in 10 parts, and har mahine mein SIP karo, find out good mutual funds, or if not mutual funds, then go for the nifty bees, or go for the like passive funds, index funds. I think here the capital is not like the point one should like discuss about. It's more about like how much patience do you have, and how regularly you can invest. So that regularity is very important, because in markets, rather than how much returns I get in a particular year, it's more about how long I stay invested. So So I also like when I hire any employee, and some interns also work with me. So they are very young guys, like probably 20, 21, 22 years. Like, so they have at least 30, 40 years with them ahead in their life. So even if we just compound by 15%, or like index compounds by 12%, I hope everyone knows like rule of 72. So rule of 72 is like 72 divided by, say, I take a, for example, 12% as a CAGR for a Nifty, for like this is just the hypothetical case, like for next 30 years. Then like in 4 years my capital doubles. So you can calculate how much it will give me the returns in next 30 years. So time horizon has to be with us, and the investment should be in periodic nature. SIP is the best way to invest if you are a passive investor. If you're active investor, then I think you probably know what to do, when like how to structure your portfolio, and how to do the analysis, and then when to buy when there is a panic and all. But I think for a newcomer, he has to understand what is the difference between the FD and market, and then how he can incrementally put his capital into a market, and slowly he can increase the his risk taking capability.
He also had one question on swing trading, or maybe trading. So any view on that, and or shall we move on to next question, next speaker?
Yeah, no. I'll take that question. I just forgot. Sorry. So see, trading is also I think it's a profession, I feel, uh, because uh, because I don't think so. Like, if you all just do it for a part time out of some tips and all, it may not work. Because what will happen, like, uh, let's say there is a very professional trader who has done very good in his life out of trading. He made his like full career out of trading, and he has given you 5 tips that ye kharid lo ye price pe, ye kharid lo ye price pe. And and let's hope your his 5 trades whatever he has given, and you are a newcomer, all 5 of them are like, they're not able to work, or they failed, your stop loss has reached, right? What you will feel about him is like, he has not given me a right advice, and this the thing doesn't work. You are lost your capital, and you are out of a market. And this thing can happen with traders. 5 consecutive stop loss can hit, but that doesn't mean कि वो system नहीं चलता है. To make that system work, you have to be patient, you have to backtest it, right? Because I also have like spent good amount of time during a trading. It needs a lot of patience, it needs a that kind of a psychology. You have to take your losses whenever they comes, right? So I think it's a full time kind of a job. One should not venture into that side of thing with leverage, because uh, leverage is like can make you or break you. So it's better to avoid that thing. Swing trading is okay if you're not taking any leverage, provided that you know what you're doing, right? It is not a blind thing, like you'll buy the dip, and then you'll make something out of it. It is not like that. The stock which has fallen by 50%, it can fall more from that level. So I feel like trading also has to be handled with care.
Right. So next we have Jitendra with us. Jitendra, you can ask.
Thank you, sir. I want to ask that what are the themes you think in 3 to 4 years will do well in upcoming 3 to 4 years, except music licensing and chemical sector?
Okay. Okay.
Thank you for making
So,
that question.
yeah, thanks for the question. So yeah, definitely those two sectors will do well. I'm bullish on it, invested into it. Apart from that, I mean, quite difficult to answer, but like this China plus one is definitely seems to be working. Started with chemical, it may go with the semiconductor side also. Right now, I am not invested. Reading about it. Uh, like I always feel like one should start with the understanding of industry and understanding of competition and what are the triggers. So these are the 2 3 points I generally keep while doing a research. So electric vehicles and everything will work, I feel, but I don't think like there is any kind of entry barrier over there. You see what is happening, what has been happening into the two-wheeler space, in electrical two-wheeler space. So demand is there, but lot of competition also is there. So who will win, how much market share is very difficult to predict. But I mean, like building materials, I feel it's a good sector to be in. No recommendation. I have been investing into it, and I feel like it can do well. Real estate also, I feel can probably do well. Like, let's see what happens with the interest rates, and again, it will be a stock specific. All the stocks may not do well, but if there are any triggers and available very cheap, which I think there are some stocks available very very cheap, they can probably do well. On a pharma side, again, pharma on a broader level, I don't know what will happen, because pharma also have different segments, starting from US based generic stocks like Sun Pharma and Lupin and Dr. Reddy's and these big guys, which actually suffered a lot after 2015-16 because of increased competition, and PBMs got consolidated and various reasons, and US FDA challenges and all. Recently, during pandemic, US FDA stopped auditing because of the lockdowns, but recently again they started. You know what has happened with Sun Pharma and Aurobindo and all. So that is the thing which I generally avoid. In pharma, I am more interested into CDMO part, because nature of that industry, because entry barriers are actually there. So I am bullish on CDMO for a long period of time, because if innovator is looking for any Indian companies, like compared to any other geography, uh, plus plus until and unless that drug is under patent, the no other competition can enter into it. So CDMO looks to be a interesting space, and I feel can do really well in future. But just a word of caution: CDMO, this term is very loosely used right now, uh, even by the companies. So just don't fall for that word, because even if it is a CMO, contract manufacturing, people will call it as a CDMO. So just try to understand before what you're investing. So I am specifically interested into NCE based CDMO, that is new chemical entity, which are the manufacturers who are manufacturing for the innovators. Very, very clear. I'm not interested into CMO or job work kind of a thing, or contract manufacturing organization. You are like generally only manufacturing for the some other what you can say, some other generic manufacturer. So if Sun Pharma is into some product, if Sun Pharma appoints some other company, so that is nothing but the contract manufacturing. People call it CDMO also, but that is not a CDMO, because Sun Pharma itself it is into all the generic products. But if any company gets associated, like for example Suven Pharma, right? So they are actually NCE based CDMO company, which are into uh, uh, which have association with innovator companies. So CDMO is another thing which I'm bullish. So my all, if you check the picks, more or less they work with understanding a competition. So wherever I feel there is a less competition, there is a good triggers, I will go with that picks.
Yeah, Shashank. So, Shashank, what's your view on financials and auto sector? And then we'll take a question from Amit.
Let's start with auto. So auto also, I think it's a cyclical industry. Auto OEMs, if you will ask me, then they don't have any entry barriers. So I will stay away from it. Probably like they have been suffering from last about 4 5 years due to various reasons, and it might be a bottom. I don't know. Like from here they can do well, but I don't think the OEM auto companies have any entry barrier. So I mean, I will personally stay away from them. There are certain auto ancillaries which actually have very good entry barriers or very niche industries. One of it I just covered in my today's video on YouTube. You can check. So that kind of opportunity I'm interested into. uh, right. So anything which is very very niche, limited competition in auto side also looks quite interesting. And on financials and like banks and NBFCs, again, it's a bit difficult sector to be in, because my philosophy of investing into small caps generally don't go well into financials. Because if any small bank wanted to grow very rapidly, their loan book and then their profitability and all, so they generally end up with the trap of a NPA cycle. That's why I started avoiding that sector. If you want to be very very safe, then go with the gold financing companies. But recently competition also started increasing into gold finance, and then you know what has happened to the Manappuram and all, because of the higher competition. So financing I generally stay away, uh, because of the nature of industry, because financial product is finally a commodity product. What HDFC Bank is going to offer, exactly Kotak Bank and any other bank can offer. It's not like a some specific product they have created. It's only about how well they do able to collect whatever loans they have given. Right. So that is the niche which they have created. But definitely on the lending part, everyone is ready to take the funds, right? The customer. So financing, that's why I just try to avoid. Definitely, I think the difficult or bad period is probably over, and we might like recover from here, because and there will be some right backs, and whatever provisions they have created during the pandemic time, that will start coming into the profitability, and optically profitability will look good. But generally I will try to avoid it, because due to inflation I feel there will be some hit on the retail side also. Probably I'm more interested and more biased towards corporate side, because the biggest beneficiary out of this inflation will be government. So if there are banks which are actually focused on the corporate side, or any companies and businesses which are toward that side, like infra and all, I'll probably look for them. That is my
Right,
understanding.
right. So Amit, you can unmute yourself and ask your question.
Yeah, hi, Shashank sir. Good evening and good evening, all the panelists. So, I have one question and one request with Shashank sir. The request is, see, as you can understand and distinguish very easily between CDMO, CMO, and CRO companies in pharma industries, because you are in depth of it. But I think common audience को थोड़ा समझने में issues आएंगे. तो please इसे थोड़ा आप elaborate कर देंगे तो उन्हें समझने में आसानी होगी शायद. I understand, but I think for the other people. And my question is, can you please just tell us something that what any new investor should avoid when they start their investing journey? Because after March 2020, so many new entrants came in the market, some willingly, some unwillingly, some due to any XYZ reasons. But some of them have done some mistakes unknowingly. So उन्हें क्या अवॉइड करना चाहिए या क्या चीज जिस पे वो प्रिसाइजली ध्यान रखें? Few things every new investor should keep in mind कि ये उसे नहीं करना है, they should not do. So please put some light on it if you are comfortable then. Thank you.
Yeah, thank you for your question. So let's come to the first question first. That is the CRO, CDMO, and CMO. So AI or Ravindraji, if you can put the link, there is a one series which I have created, which is available for free for everyone on YouTube. It's a pharma series. It's I think 4 or 5 video series where I have clearly mentioned about. It's like every video is probably like 20 minutes to 40 minutes, 50 minutes. Very deeply I have covered that thing. So still um, I will mention it over here. So like I hope it is not boring, because it is a long thing, but I will try to give whatever justice I can. So basically it starts with the drug discovery process. So drug discovery is nothing but, like, take an example of COVID is a novel disease. No one knows what are the symptoms, what are the probably how the COVID has happened, and we didn't had any drug for the COVID until we came up with the vaccine, first vaccine. So so the drug discovery has various phases. which is preclinical trials, and then clinical trials, which includes phase 1, phase 2, phase 3, and then commercialization starts. Right. So what happens is a innovator company who is actually into development of these drugs, new diseases keeps coming, and these innovator companies keeps working on to solve and to find out the medicine for those drugs, right? Which is the case with the COVID. So these innovator companies have to burn a lot of cash. If you take a Indian examples, few examples are there in India also, like Suven Life Sciences is into innovation. So they have to burn lot of cash because they have to keep on doing the R&D, different tests, different have to collect different data, and then have to go through series of what you can say the clinical trials, and still not very sure if I'll get outcome or not, right? So let's assume they got a outcome, they got a required efficacy data and everything, and right now the drug is ready for the commercialization. So now instead of putting their focus on manufacturing side, they will keep their focus on the innovation and R&D part, and they will hand the manufacturing to a separate dedicated guy who have actual efficiency and capabilities to handle that particular molecule. Because when generally these tests are performed or clinical trials are done, at least in level at least in stage 1, so they are done at very small scale. So so like probably at kilo level and maybe a few tons. But when it becomes commercial drug, then that volume really expands, right? So so the guy who have the efficiency and who have the process which is set for the small scale manufacturing might be very different compared to when it goes to the commercial manufacturing. So these innovators uh, approach to the manufacturers, and then there is a partnership between the innovator and a manufacturer, where manufactures for that company into a for the commercial stage production. So that is basically a you can say a CDMO. Along with that, they helps with some other things also, like packaging and all. So collectively, it calls at a CDMO. You please, anyone is more interested in understanding CDMO, you watch that video. I have like explained with the diagrams and the presentations and everything in very in depth. Uh, Otherwise, you can go on my site valueeducator.com. There is a separate section which I have created for the investor. It is investor resources. Many things are there under that. There is a one section called Pharma Basics. So you can click over there, and there I have like explained these things very in depth. And then CRO is nothing but the like a research organization, and CMO only helps with the manufacturing part. So this is just an introduction I'm trying to give. More in depth details one can watch on my YouTube and on my website also. Coming to the second question about like what things the novel and the investor who is coming first time into market, I think like there has been a lot of miscommunication, and what you can say like the guidance is not given well for the new investor, I feel. Because everyone will start saying कि IPO ले लो, या कोई टिप्स के ऊपर बोलेगा कि ये खरीद लो अच्छा करेगा. Lot of people go beyond the momentum investing. Lot of people go beyond the penny stocks investing. So one should strictly avoid the penny stocks and investing based on tips, and probably the IPOs also, if there is a hype into a market, right? Because you know what has happened with the IPOs recently for the so-called IT companies. They might be good companies, but came at exorbitant valuations. So no good company can have a infinite valuations, according to me. So these, I think, two three things, if new investor can avoid. Best way, you approach to a good mutual fund, good index investing, and Nifty Biz, I think one should be much better rather than investing into IPOs and rather than investing based off out of tips and the momentum investing. So that is my easy answer.
Yeah, Shashank, I have tagged that, I mean, your pharma video link over this space. And guys, जो शशांक के videos होते हैं वो bilingual होते हैं, तो everyone can have access, सबको समझ में आएंगे, काफी detailed होते हैं, आप देखिए और appreciate कीजिए। और जो जो panelists हैं हमारे, उनके भी handles को आप देखिए, और if it is adding any value, kindly connect with us. So with this, Shashank, how good we are on time?
Can you hear me?
Yeah, yeah.
Yeah, I'm here. No problem. Like I will be there for till the last question.
Okay, great. So, anyone else from the audiences, if they have questions, they can send in their requests fast. And Ravinder, Avinash, if you have any further questions from Avinash, you may ask, or otherwise, I'll ask.
Yeah, I think my another question to Shashank would be that one definitely needs to be careful as far as cyclicals are concerned. But in the entire valuation process, apart from the PEG ratio, which you said if it is one time, then it is attractive. Which are the other important valuation tools which you use when you want to look at a kind of a future kind of a potential investment opportunity? Typically, do you like to invest in companies which are loss making, like something like Paytm or maybe Zomato? What is first of all your thought process on such companies, and secondly, when you come to valuation, do you think the current set of metrics which is used to value such companies, is it right? Because normally people value these companies on the basis of price to sales, because there is no profit at all. So what is your thoughts on these companies? Do you think that these companies have only got narrative, they don't have any strong data to back their businesses, or investment style has changed? Because we are old members. I've been in the market since 1992. So for me, obviously it's little uncomfortable. I would not like to put my money on such companies which don't generate any cash. So what would be your view on these sector companies? Because now we have seen so many companies which have come in the market on these segments. So is the retail investor right in betting on such companies, and will really wealth be created out of such companies, hopefully?
Yeah, thanks for that question. Again, a very good question. Like how we should actually value these companies. So I am also not invested into any of these companies just because I'm not able to value them properly, and I don't know how to value them actually. Because if that company is actually a loss-making company, it becomes very bit difficult if you cannot predict what can happen in the future. Um, but another thing we have to also look with these companies is that sometimes they are probably uh, like purposefully they are loss making, because accounting works actually like that, right? So because their all expenses are very upfront expenses, their employee based expenses are upfront expenses. It is not like a manufacturing activity where you'll set up a plant which will go out of your balance sheet, and then you'll have the depreciation which will come into the P&L statement, where the accounting for these companies works little bit different. But I feel it is really difficult to value these companies because I won't only value a company based only on price to sales. Because finally, if I'm investing into that company, because over the period of time, it's going to generate the cash and it's going to generate the profit. If it is not going to generate a profit, only like probably like the sales will increase, and then due to various reasons, they're not able to actually generate a profit due to competition and some other things. I'm not probably interested into it, and then I generally stay away from those companies, because in market different people have the different understanding. We have to respect everyone, but we have to also decide our circle of competence. What I don't know, I generally don't try to venture into that thing until and unless I gather that understanding. So and another thing, like these companies have the history of the private investors, right? So they actually works with some different things. with respect to the capital markets, or stock market. So I generally will try to avoid these companies. I don't have any particular framework to do the valuations, and I have not invested into any IPO till this recent round of 2021. So generally, I'll stay away. I don't have a particular framework to value these companies. And plus, another just a small additional point for me, the stock like should queue the returns in multiples, right? Two times, three times, four times, five times, 10 times. So I don't think like IPO which will come at 1 lakh market cap can give me 5x returns or 10x returns, because the biggest companies are started reaching their of that valuation, which are probably 20-30 year old companies. So if I cannot see that the 1 lakh market cap can reach to 5 lakh market cap, definitely it's not an investment candidate for me. But 3,000 market cap can go to the 10,000, 15,000 if they able to deliver.
Yeah, thank you, Shashank. So, Shashank, as you told, you are more interested into small caps. So, I mean, when if we ask you about selling, how you come to a conclusion that at this juncture I should sell my position, or how you go about selling your positions?
So selling is also very, I mean, buying is firstly difficult task. Selling is, I think, probably 10 times difficult than buying. So it's a subjective thing. It is you get it out of a lot of experience, I think. And I have done many mistakes and doing a mistakes into selling a stock. So what I generally prefer is like there are 2 to 3 simple criterias which I try to follow while selling. First thing is, whenever your thesis goes wrong, accept it. You might have to take the loss. I have taken a loss in my investment journey in many stocks. Accept it and get out of it, and then use that capital and park into the better businesses. So that is one way to sell. Second thing is like a valuation part. So, and valuation is a very difficult part. And even the first which I have mentioned, like when you think you have gone wrong, it is also equally difficult, because what happens, let's take an example. You have bought a stock at 400, and let's say it has gone to 200, and then now you have understood that like I have done a mistake and my thesis is not working well, and probably you have exited by 50% cut, and you have exited 200 rupees. फिर वो स्टॉक 200 रुपए का 250 होता है या 300 रुपए होता है, देन यू स्टार्ट फीलिंग अरे ये तो मिस्टेक हो गया. I mean, I probably bought at wrong price, and probably I sold at wrong price. So it is bit difficult, but you'll start improving it with your experience. So that is the first way. But I think whenever your narratives changes, or whenever your thesis goes wrong, accept it. There are plenty of other opportunities, and you can repark that capital into something which you feel better at that valuation. So that is one way. Second way is more of a valuation. So I bought something at 400, and let's say it goes to 2000 or say 3000 rupees. Abhi isme kya karne ka? Right? That is again a very difficult thing. And let's say you bought at 400 and you sold at say 2000 rupees. Then that stock goes to 1500 and 3000. Then you start feeling, अरे ये क्या कर दिया, 2000 रुपए में बेच दिया, and then now like it is daily going up. And during bull market, this is what happens, right? So this has happened with me also. But you have to stick to your own conviction, own thesis. So if something goes beyond probably like 100 PE and price to sales of say more than 15 times or more than that nature, then I generally start exiting that kind of a thing. And I need to see what is the incremental growth I will be getting out of it. If a stock is say at 50p 60p, I'm okay provided that utna growth aa raha hai ya nahi. If they are keep on generating or growing at more than 30-35%, I will still hold that stock. But if the growth is like 20% or 15%, and the P multiple is beyond 80, then I will probably start exiting. And exiting also, I generally start exiting into parts, and then I watch what is generally going on to a market. And then if there is generally a bull market, then we can be a bit slow. into selling. But it is not a easy thing. It is like I mean, you have to try trial and error kind of a thing, and every stock, different stock, it works differently. There is no set parameters. I feel directly कि ये 100p आने के बाद ही sell करना है या 80p आने के बाद ही sell करना. It is I don't think it is like that. But it is better to be very very cautious when valuations goes extremely high. You can either keep your putting your stop loss at upper levels and then start exiting partly. That might work well. And one thing is clear कि stock market में बहुत सारी opportunities है. It's only thing is कि आप कितना research करते हो and आपको like how much understanding you have in that particular sector. वो नहीं तो दूसरा कुछ मिल जाता है. So like no point of holding I think stocks which have the price to sales beyond 15 and 20 times, and like P is probably 80, 90, 100 times. So I am not in that camp. I will generally start exiting. And it has happened with me, like the stock which probably I bought at 25p gone beyond 100p, and I'm out of those stocks because I cannot hold them. And after my selling, they have gone probably like 15%, 20% up, and then they're probably down 50% from that price. But now I'm not comfortable buying 50% cheap because the growth rate has been affected. So I will buy something where I feel the PEG is 1 or near to 1, or between 1 to 1.5. So that is generally my framework.
Yeah, right. We got it. So, we see when correction happens in the market, obviously the behavior is just the opposite, even in the bull phase and in the bear phase. So, how much time you think, the people who have seen cycles over a period of say 5-10 years, they can better relate to this. But the behavioral aspect, which is very important. So, how one should develop it in a proper manner?
So for the behaviorist finance, I will just recommend one book by Mr. Parag Parekh, Behavioral Finance and Value Investing. So whoever is interested into investing and doing some research, I think one must read this book. Very very simple to understand book. Very like language is very good. If you don't want to read book, go on YouTube. He has there are multiple videos by Parag sir, so you can just watch those videos. Excellent explanation. And if one can follow that thing, I think like more or less you're done. Or if you want to go much deeper, then Berkshire Hathaway के annual AGMs पढ़ लो, देख लो, and it's a good I think good well time spent. So I think that will cover on the behavioral finance part. So I don't wanted to like give my explanation because already the explanation given by the Parag sir and Berkshire Hathaway meetings, it's a excellent explanation. So you can go and watch those videos.
Yeah, right, Shashank. So we will wrap up in another 5 minutes. So if anybody from the audiences have any question, or maybe from the panelists, they can send in the request. Otherwise, we will request Shashank to conclude, to say some concluding remarks, and then we will close this space for today. And indeed, it was a very interactive session. And another request for the audiences: kindly see the handles of the panelists, and I can tell from my experience, we are really benefiting from their videos and their analysis. They are putting in their hard work, and so much of time is devoted for doing one video. So you will yourself find it worth when you see, and more specifically, it is bilingual, so all the audiences can be able to understand it well. So over to you, Shashank.
So first of all, thank you very much, AI, for hosting me here. And it has been a great session. Good questions by you all and the participants. I thoroughly enjoyed it. So just concluding thing is like whoever are the new investors, stock market is not the get rich quick kind of a system. Make sure you put your efforts or give your funds to the one who understands it. Probably a mutual fund or the best way is the index fund, and stay invested for a long time, because rather than returns, I think the time you invested matters more, right? So and like, do check my YouTube channel and the website. I hope you'll find good value out of it. If you think it is something which by which you're able to learn and understand something, please let me know on my comment section on YouTube video. And if you need anything, please let me know on the comment. I'll probably create that content for you all. Thank you very much for your time, all of you. Have a good night.
Thank you, Shashank. Thank you. It was really nice. And once again, audiences, any names taken during the educational spaces are meant for explaining the things only. That should not be construed as advice and recommendations. It is your money, and you should be very conscious about it. Where you have to invest, what you understand, you should invest in those asset classes only, as rightly said by Shashank, over a period of time. That if you are not able to do it on your own, either go for a person who can help you on this, or go the passive way. So with this, I sincerely thanks Shashank and other panelists and Ravindra who hosted with me, and all the audiences who patiently listened to us for almost 2 hours and asked very relevant questions to the market situation. And I try my best to come up with more learned people like Shashank over spaces, so that we can together make a conducive atmosphere where we can learn and grow in trajectory in our market journeys. So thank you so much, guys, and good night. We are closing. Thank you.